Today we're going to talk about the DXY, Bitcoin, and that relationship between the two and why it's so significant. I'll show you exactly what I'm looking for from the DXY that could trigger a move higher from cryptos later this year. Plus, we're going to get into updates on Ethereum and also MEGAWEAPON. I'm going to show you why the weapon token, I think, is set for big moves here over the coming months. Now, if you guys do enjoy this content, be sure to subscribe to the channel, click that bell icon to get notifications because I am releasing these videos every day, Monday through Friday. All right, so Bitcoin DXY. Let's take a look at the relationship first before we get into the DXY itself, and then also later Bitcoin. Now, the DXY is the US dollar index, and this is something that there's still a lot of controversy over. People think that they're not correlated at all. Personally, when I look at the weekly time frame, it is very difficult to make the case that they are not correlated. There is an inverse correlation here on a macro level that has been in place since Bitcoin's inception. If you look here, okay, so the DXY is in orange, and Bitcoin is in blue. Every single cycle top from Bitcoin has resulted in a bottom for the DXY. Said differently, every bottom for the DXY has resulted in a top for Bitcoin because the DXY is very much in the driver's seat here. It's the global reserve currency, so it is triggering these moves, not the other way around. So the big question now is this low down here for the DXY triggering the next bear market for cryptos? But I don't think that it is, guys. And I think there's something different at play here that I talked about last week, and that is a macro shift in the trend for the DXY. So if you'll notice, the very first thing I want to show you is, if you'll notice every time the DXY has moved higher, okay, it moved massively higher back here, very aggressive rally. Same thing back here. Every single time this has resulted in a bear market for cryptos, okay? Bitcoin has come off its highs by 80 to 90%. Now, this time has been very different because the DXY has moved higher, yes. However, Bitcoin this time is just going sideways, okay? We're not seeing those lower highs and lower lows that we've seen in the past. Now, why is that? In my opinion, it's because we've seen a macro shift in the DXY. And for that, let's go ahead and take a look at the DXY itself. So this is the monthly time frame, and this is a trend line that I've discussed before where you can see off of the 2011 low down here. We have several touches off of this trend line. Then the DXY broke below this trend line back here in 2020. Okay, now we've had a retest as new resistance. So the fact that Bitcoin is now moving sideways versus lower, where we've seen in the past when the DXY rallies, Bitcoin sells off like every other cycle that we've seen, that to me is indicating a macro shift, which lines up with this trend line breakdown. Now, a trend line is just a trend line, I get that, but this is something that we've seen the DXY do before. Okay, so back in the 90s and early 2000s, we saw the DXY do something very similar. And keep in mind too, guys, this is a macro downtrend, okay? Lower highs and lower lows from the DXY since inception. All right, so this all lines up with what we're seeing right now. So back here in the early 2000s, we saw a breakdown here of this trend line. So this was a shift in the macro trend. We got a downtrend, a multi-year downtrend from the DXY, and we could be seeing something similar play out now, where we had a breakdown here, retest as new resistance, and if we see the DXY start to rotate lower, we could very well be on the brink of a multi-year downtrend. Now, this would be a macro shift, and as I said last week, we have never seen Bitcoin exist during a macro downtrend from the DXY. So it's going to be very interesting. And personally, I think this is why we're seeing Bitcoin react differently this cycle than before. So obviously the players involved have changed too. We're seeing a lot more institutions involved now. But I think one reason that we're seeing Bitcoin react a little bit differently over the past 13 months is because the DXY is changing its trend, okay? Now, if we look at the weekly time frame, this is what I'm watching for right now. All right, so in order to see the DXY weaken, which is what we need to see for cryptos to strengthen, at least that's been the case ever since Bitcoin's inception, we need to see the DXY take out last week's low. Okay, because this candle right here, this big red candle, was a bearish engulfing week. Okay, so notice how from the open to the close, it engulfed the previous week's open to close. So it's a bearish engulfing week. However, we need to see the market take out last week's low at 95.13 to confirm this pattern. Now, today's low is 95.17, so it came very close, but not quite. So if you look back here in March of 2020, we saw something very similar. All right, so this candle up here, this big red candle, was also a bearish engulfing week. We got several weeks of consolidation then the market broke down. Now this breakdown from the DXY was pretty much 80% of the crypto bull market. All right, so this bottom down here corresponds to when Bitcoin topped out at 64,000. So if we're going to see Bitcoin move higher later this year, we need to see the DXY move lower in the same way that it did back here. Now, I'm not insinuating we're going to see a move higher like we saw during this period here from cryptos, okay, but even a 5 to 10% pullback from the DXY could translate to a much higher Bitcoin and the rest of the crypto market. So it is incredibly significant, but again, we need to see a move below 95.13 to confirm last week's bearish engulfing candle. Now, what I also want to see if we look at the daily time frame. All right, so I talked about this last week, how we have this trend line off of the May low down here, and we've just had this series of higher lows ever since that time and higher highs. So in order to reverse this, we need to see the market put in that first lower low, which in this case is below 94.60. All right, so I want to see the market move below 95.13 to confirm last week's bearish engulfing candle. However, I also want to see it move below 94.60 to give us that first lower low in this series. Okay, so we need lower lows and lower highs to confirm the trend reversal. So what we saw earlier today with the US CPI readings, they came in a little bit hotter than expected, okay, than forecast. And that has put some pressure on risk assets like stocks and cryptos, and it's also caused the DXY to rally. Now here's the interesting thing about this, okay, we saw an initial rally from the DXY following that CPI reading, okay, but then we got a big sell-off below this trend line. Now the market is recovering. So we've seen a lot of gyration today, and that's to be expected because everyone is hyper focused on inflation. They all want to see what the inflation numbers are because that's going to tell them what the Fed is likely to do later this year. So at the moment, it's just a lot of volatility. It's a lot of noise. We'll see where today closes, but today doesn't have to break down, guys. I want to make that clear that we could see several days, if not weeks, of consolidation before we get that breakdown. Keep in mind that back here in March, okay, we got several weeks of just sideways movement before we saw the market break down. But keep in mind that it never did take out that bearish engulfing week. Okay, so this red candle right here was the bearish engulfing week, and we saw consolidation, but the market never did take out that high. Okay, if the DXY were to take out this high up here, then this signal is off the table. Okay, it's no longer valid. But as long as it's below that high up here, right around 97, just above it, then this signal is valid. We do need to see a move below 95.13 though to confirm it. All right, so with all of that said, I know it's a lot to take in, guys, but it does matter for the crypto markets. Let's take a look at Bitcoin, which is testing the $46,000 area that I've mentioned as resistance over the past few weeks. So you guys will know that I was buying Bitcoin between 42 and 35. I had bids set all the way between this area. My average rate is still right around $38,000. I've taken part of that position off. I took some off here, and I also took some off recently up here. Now, I am looking for a move higher from this region, okay? I still have most of my long position on, no leverage involved, it's spot only, but I do also think that there's a good chance we could see a pullback into support down here, maybe around 42, maybe just below it before we get that move higher. So what it's going to take right now from Bitcoin is a close above the $46,000 area. All right, so these lows back here to confirm the breakout, flip that area to support. Now, 46,200 is going to be key because that's the yearly open. So this candle right here, all right, this is the yearly open. So 46,200, this top red line is going to be absolutely critical. We need to see Bitcoin close above that to confirm the breakout. If it does and we see a daily close above 46,200, then this area becomes support, and the next stop is going to be 50 to 53,000. All right, but I do think if we were to see Bitcoin get above 46,200 on a daily closing basis, that would be a huge breakout, guys, because it would mean that Bitcoin is making new highs on the year. And in my opinion, that takes us up to 50,000 to 53,000, if not $60,000. Alternatively, like I said, if we do see a pullback, keep an eye on $42,000. Anywhere between really $42,000 and $40,000 is going to be support. Now, one last thing here, the volume does look pretty good this week. If we look at the weekly chart, you can see where the volume is decreasing, but keep in mind that this week is far from over. So what I want to see here is if this week closes green, I want to see the volume to be higher than last week. We don't want to see a decline in volume like this as the market is making higher highs and higher lows. We want to see the volume stay strong, okay, up in this area, And at this point, guys, with where we are in the week and where the volume is, I do think it's going to be considerably higher than what we saw last week, which is a good sign. So keep the volume up and, stay consolidated between this area, all right, basically above $40,000. And I do think we're going to see a move higher from Bitcoin over the coming weeks, but we could see a pullback before that time. All right, so let's go ahead and take a look at Ethereum next. So this market is testing resistance this week. So this channel top up here is something I've pointed out over the past few weeks. So we saw a reclaim of this level back here. And one thing about false breaks like this, guys, is when you see a market put in a false break like we saw back here, anytime you see a reclaim of that level, so this candle right here that reclaimed it, retest as new support right here, that reclaim means that a move higher is likely, and that's exactly what we got. So a false break to one side of a pattern like this typically triggers an extended move in the opposite direction. I've always said that for years, and this case is no different. We saw the false break down here. The market reclaimed this level, okay, retested as new support right here. We got a considerable move higher up toward resistance. So far, this is playing out perfectly. Now, at the moment, Ethereum has to get above this trend line up here, okay, this channel top up around 3,200, maybe 3,250. So it needs to clear this area on a daily closing basis to flip it to support and expose 3,600. In the meantime, if we were to see a pullback, keep an eye on 28 to 2,900. So this area is going to be critical for Ethereum going forward if we do see a pullback. All right, so this area through 28 to 2,900 is going to be support. And keep in mind too, guys, that there is a chance if we see a bounce from there, if we see a pullback into this area, that look what we could have forming here at inverse head and shoulders. Okay, so keep an eye on that too. If we do see a pullback to 28, 2,900, followed by a bounce higher back to this high up here, all right, that could very well give us an inverse head and shoulders that could send this market quite a bit higher over the coming weeks. Now, alternatively, a move below this area around 2,800 would expose 2,200. And as I mentioned, above this area around 3,250, we likely see a move up toward 3,600. And lastly, let's take a look at the play to earn token weapon. Okay, this is a token I've been talking about since back in December when it was trading just above $1. So back in this area, I was talking about it. I was also buying it then. I haven't sold a single token because I do think that this chart and the project in general has a lot more to go. So we saw a nice rally up here toward this resistance area around $4. And you can see that lines up with this high back here. So right now, this chart is forming what's called an ascending triangle. Now, I know there's a lot of skepticism around technical analysis, especially with micro caps like this because it is limited volume, but the chart speaks for itself, guys. I mean, right now we have higher lows into resistance, all right? And typically when you get this, it is an indication of a move higher that's coming. Now, what's interesting about this, or what's nice about it, is that because this is a terminal pattern, it means that the weapon token must break out sometime later this month. Now, what we don't know is will it be a break lower or higher, but with everything they have going on, I have to think that it is going to be a break higher. Now, the objective of this pattern comes in around $20. I've talked about that before, but if you take a look at the height of this pattern, so from the low down here up to resistance, you get about 500%, and measuring from a potential breakout area up around $3.50 to $4, 500% higher from that area gives you a region right around $22. So that may sound crazy considering it's trading at $235 today, but keep in mind that there are only 10 million tokens. It is fully diluted. So all 10 million tokens are out there in the market, and a move up toward $20 would put the market cap around $200 million, which for a project that has staking coming out in the next few weeks, it has a full game later this quarter, not to mention an NFT degenerator, as they're calling it, a $200 million market cap is not out of the question. In fact, I think it's pretty conservative. So what I think for later this quarter, not financial advice, but just my opinion, I do think that we are going to see a move up toward $10 to $20, if not higher, within the next couple of months. And one of the reasons I think that is because they do have staking coming out. It could be anytime in the next few weeks. They are just waiting for an audit to finish up on that, plus legal to give the green light. So that could happen any week now. And once it does, it's important to keep in mind that because staking was delayed, they've basically been accumulating 3% of the daily volume ever since December 23rd. So whenever staking launches in the future, they're basically going to take that number of weeks, okay, and tack it on to staking. So you're going to get that 3% plus the 2% of daily volume going forward. So staking rewards are going to be increased significantly during the first, let's say 2 to 2.5 months of staking. So what that's going to do is it's going to trigger a lot of buy volume because people are going to want to get in to take advantage of those increased rewards. And at the same time, people aren't going to want to sell because if they sell, they can't take advantage of the rewards. So you're going to have this imbalance of a lot of buying and very few people selling, which is why I think we do see $10 to $20 within the next couple of months, if not higher than that. And as I said, they do have the full play to earn game coming out later this quarter, in addition to the NFT degenerator, which is basically a function where you're going to be able to create your own degen as part of the game. That's also an NFT. So you can create your own NFT that you can then sell on OpenSea or wherever you want. So all of this stuff is coming, guys, within the next couple of months. So there's a lot of catalysts in the works here. And that's why I think that, over the next few weeks, maybe 2 months, we do get a significant move higher from the weapon token. So if you guys are interested in buying, it is available on Uniswap with, I believe, a 12% slippage. Okay, it's only if you're interested, not financial advice. It's completely up to you. And one last thing, guys, as always, I am not paid to mention this project. I've never been paid to mention any project, nor will I ever be. This is something that I'm interested in. I think the game looks awesome. I trust the team. I think the token has a ton of potential. It's never financial advice. It's always your decision, but I just talk about what I'm interested in. So what you decide to do with that information is completely up to you. All right, guys. So I hope that this video has helped you kind of navigate the markets. If it has, be sure to subscribe to the channel, click that bell icon, smash the like button, and leave your comment below. I will talk to you guys again tomorrow.